Francois, good morning. Hello
Good
again.
morning. Good morning.
During the week on Wednesday, you wrote an article for All News urging caution on behalf of the market, which has been expecting uh, very quick reductions in interest rates. Am I the only person waking up this morning thinking that we may have a problem that the US economy is running too hot? Or is this Goldilocks?
In a way, it is Goldilocks, and that's the problem. You are playing with something that has happened very, very rarely in the US economic history, which is a soft landing. This is something that the Fed has been able to produce. If you judge by the number, GDP number yesterday were very, very good. Growth is resisting, and what is interesting is that inflation is coming down. Something very unique. My point is that when you have such a situation where you have realized this kind of dream scenario, which is the soft landing, why do you want to take the risk to lower interest rates too quickly, risking a loss of control again on inflation, which would be a nightmare because then the market will really dislike that. So I think this is one of the reasons why central bankers need to be patient.
Growth is running far above the average of the last 50 years. Where is this growth coming from?
Mainly, if you look at what happened in the US, you can derive the rate of growth and you exclude the fact that there was the COVID issue. And not really, but the first support is government spending. The Biden administration has been providing strong support by spending a lot of money. It's in trillions of dollars that were spent in infrastructure, the famous Anti-Inflation Act. All those programs are supporting economic activity. The second element, and the most important, is consumption. Consumption benefited in a way from the fact that liquidity was injected directly to the bank account of all American consumer through the checks that first the Trump, second the Biden administration provided. And what happened is that when people were confined, they could not spend the money. And so that was at one point, they increased significantly the stock of saving they had. And once the situation improved in terms of COVID, then they began to spend. And that's the reason why you have such a high resistance of growth in the US. And if you want, they are in a kind of virtuous cycle because consumer is growing, consumption is growing. It feeds into economy. Then the government is spending money. It feeds into the economy. It creates jobs. Jobs create income. Income plus saving creates the fact that you have a strong consumption.
What are the economic numbers coming out in the next few weeks that could comfort people like the market and yourself to a certain extent that this is the Goldilocks scenario, or comfort people like me who are just worried that maybe the economy is going too fast?
What are the numbers? They will always remain the same. I think that the first thing, and when you listen, for example, to the decision of Mrs. Lagarde yesterday, she was very clear. She said, yes, the disinflation is continuing, but we want to make sure that we are going to reach our medium-term target on inflation. So all inflation numbers are going to be very important because at the end of the day, this is where the question mark rests. You know, there is a strong tendency for people to compare what is happening today to what happened in the 70s, early 80s. Remember, at the time, Volcker had to kill the economy because after a period where inflation was coming down, they lowered interest rates too quickly. Inflation came back, and it was the reason why they had to kill first the economy, second to kill the market. So I think that inflation numbers are going to be key. You need to have the inflation number supporting the case for inflation is no more a problem. When it comes to the medium term, I still believe that people should be careful with this idea. You have some factors that are telling you that inflation is not going that easy to bring back to 2% over the medium term. So inflation number are going to be key. And second, for Mr. Powell, which is benefiting from the fact that economic activity is very strong, he needs to rely on what are the consumer and the companies going to do. Are they going to refrain from spending as much as they did over the last few quarters? So in this case, what you need to look is employment numbers. And this is the numbers that you need to watch very carefully, because what would be dangerous if it's suddenly you have an increase in unemployment, a reduction in job creation, that would tell you that consumption is under pressure. So those are the numbers I will watch carefully.
I was very surprised that the bond yields and the dollar aren't higher this morning. Is that is that going towards your argument that this is Goldilocks economy and we're going to achieve high growth with not very much inflation?
Okay, alors, then I need to characterize. I'm not sure that you can, I don't believe that high growth is going to remain at the level it is. Growth is not going to remain as high as it is today. By essence, it's going to slow down. The Goldilocks and the kind of soft landing scenario is the idea that you can have a decrease in inflation, a decrease in growth, but you will avoid recession. You will avoid negative growth, which is exactly what the Fed is looking for. Why did we have the phenomenon you mentioned, which are bond yield going down and the dollar coming down this morning? It's mainly related to the perfect number of the GDP yesterday. On the one side, you had growth, but on the other side, you had inflation coming down, and you are core PCE getting to the 2% that the Fed wants to see because it's the medium-term target. So for the market, this is perfection. For bond yield, it means that, okay, inflation is under control. There is no reason why bond yield should get higher, and it is weighing a little bit on the US dollar. Nevertheless, don't forget that the US dollar was trading around higher level against the euro a few weeks ago. So the US dollar, if you try to judge by a weekly or monthly trend, remain supported in a way.
Help me out a bit here. Is there anything that could put this scenario in danger, like the recent gentle rise in oil?
There are many things that can derail. When you listen to Christine Lagarde and other central bankers, you know, geopolitics is one factor that is playing a significant. It's a significant uncertainty because you don't know what is going to happen in the Red Sea region. We have all those problems in terms of geopolitics, which have an impact in terms of economy. As you mentioned, oil price is going up. I think that yesterday it closed at the highest level in 6 weeks. And this is a factor that you have to take into account because an energy shock would be not necessarily very, very good for the market and for the economy in general because it would feed into inflation and it would go against the idea that inflation is no more a problem. I think that's something that you need to watch very carefully, geopolitics and specifically the development on oil prices.
Okay, so generally speaking, we're sticking with our beginning of this summer in terms of the schedule for talking or actually reducing interest rates in the US. Is that correct?
And the market is pricing it earlier. There is a big debate. You know what is interesting about this article is the fact that there is a disconnect. And what is interesting, there is a disconnect between market perception and what the central bankers are trying to say. And again, you know, look at what happened yesterday in Europe. In Europe, Lagarde said, we will consider lowering interest rates by the summer. What happens overnight? The people still believe that they are going to lower rate in April. And I think that in the US, there is a big divide between the people who say, oh, but now the Fed, and because of political reason, because the elections are coming, and etc., the Fed does not want to be the hostage of political events, so they are obliged to lower interest rates in March. And you have some people who say, no, politics has nothing to do. What they want is to make the soft landing happen. And for the time being, they are doing it. So do not go too quickly. And they believe that it's going to be in June. The market still believe that there is room for interest rates to be lowered by March or April in the US also. So there is a disconnect, and this disconnect is dangerous. It's dangerous because it means that markets are not aligned with the message of central bankers. And you have a famous strategist who is saying, with Eddie Ardeni, who is saying, be careful. I believe that markets are going to go up. But the move lately has been so huge that I believe that we are maybe reaching a point where there is exuberance in the market. And that's the reason it's very important that central banker impose the message that they are not going to act too quickly, because otherwise it could bring the market to level that will not be sustainable in the medium term.
So do you think we've achieved peak irrational exuberance, for want of a better word?
That's a very good question. I don't think that I have the ability to have the answer. I think that I feel that you have some risk, and that, but look, the earnings season is delivering. You have solid numbers coming out from tech company. This morning you have company like LVMH who came out with numbers that were better than what was expected. So it means that at the end of the day, maybe the market is due for a consolidation. It doesn't mean that the market should correct significantly from current level. Okay, you are close to 4,900 on the S&P, which, by the way, is higher than the average target by most strategies by the end of the year, because it was 4,865. Does it mean that we go back to 3,800? No, I don't believe so. 4,000? No. Maybe you can have some consolidation again around the level of 4,500. It would be a nice consolidation. It would be a good consolidation to my point of view, as long as the scenario of soft landing is materializing.
Jim Cramer has been urging investors to take some profits in the last few days. Would you go along with that now?
Again, yes. As if I had to make a tactical move, I would say, okay, there is room for you to try to protect part of your investment. But, and the but is very important, I still believe that with the economic numbers that we had in the US and even some numbers in Europe, the idea that recession in the coming 12 to 18 months is going to be avoided is reinforced, because the numbers are so strong that it means that the soft landing scenario has gained in credibility. So even if you go for a tactical retreat, don't avoid equities in 12 to 18 months with a 12 to 18 months horizon.
Coming to Japan now, this morning the inflation numbers missed their target. We were looking for 1.9%, they came out at 1.6%. This would suggest that the Bank of Japan has been correct in avoiding increases in interest rates, and maybe they got away with it. Is this indicative of of future inflation in Japan?
I think that it's a number. It's very interesting because what you refer to, you are right. They did not reach. There is no stability in inflation, which is exactly what the Bank of Japan has defended. They said we have no clear sign that we have reached this level of inflation on a sustainable basis, which is 2%. So we will refrain from hiking interest rates. So on that, yes. What is interesting is the reaction of the market. The equity market this morning did not perform well, despite the fact that at the end of the day, if you don't have any interest rate hike in Japan, it means that it means that the yen is going to be weaker and it will support the equity market. But the market did not buy that. What they bought is the idea that, maybe there is a risk that deflation risk is not as low as we expected in Japan. And deflation is the worst case scenario for an equity market.
Francois, as ever, it's lovely talking to you. I think we'll be speaking again on Monday. Have a good weekend.
Have a good weekend. Bye bye.
Bye bye.